Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing, make sure you reach out to a qualified financial advisor. But with that said, let's get into another episode of the Young Investors Podcast.
All right, everybody, welcome back. Hamish, my friend.
Hello.
How are you?
Hello. Hello, sir. Hello, Mr. Co-host of the podcast.
Imagine if the podcast literally just started as just as I called you. It's just call, hey mate, how's it going? And that's just where it started.
Yeah, well, if we did start it like that, you'd just see me, everyone would just see me frantically setting up lights and just in absolute chaos. I haven't had my coffee yet. Give me a second, Brandon.
Hey, and I just got to set up the camera.
Yeah. Absolute shit.
Actually, it wouldn't be good at all because we just talk smack for 15, 20 minutes before we actually start recording the podcast.
Wouldn't be great if we aired 15 minutes of us just riffing before.
Just talking about random junk. Oh my god, did you see this happened? Yeah. Anyway, how you been?
Yeah, going well. Yeah, going well. I'm excited because we got a new Buffett interview. With the investment gods have blessed us with
thank you
with a 2.5, not even just an interview, a 2.5 hour interview with Warren Buffett, which came out
content for days
last night. Yes. And he talks about a lot of stuff in this interview. We haven't actually watched it. I've watched a few clips of it that were posted on YouTube, but it is 2.5 hours and it came out in the early hours of the morning.
Yeah.
For us Australians on the other side of the world, unfortunately, I was in dreamland when it was released. But we'll definitely talk about some of the highlights of the discussion, including some increased investments of his Japanese companies that he'd invested in back in 2020.
Nice.
So that had been kind of all quiet for a little while. No one had really said anything about that. And then all of a sudden, over the last couple of days, we've heard that announcement and been blessed with an interview where he talks about it. So, yeah. It's
exciting. Yeah, there's a one line in the interview where Becky Quick, it's great. I was surprised. Becky Quick, she's on CNBC every morning. She has flown, because they're in Tokyo. So she flew to Tokyo just to have a chat to Warren Buffett.
Yeah.
It's so crazy that they actually went to that effort as opposed to just wait till Buffett gets back and just go to Omaha kind of thing. That's a lot less distance to travel.
Yeah.
But there was a line in there where she was like, well, it's good to sit down with you, Buffett. These interviews are getting few and far between. And as soon as she said that, I was like, I know, right? Can we do a few more, please?
I need a new Buffett video.
Yeah, it's half that, but it's also just he's the best investor the world has ever seen. And I know he's done a lot over the years, but he used to be in the media a fair bit more, doing CNBC interviews, a lot more. So you get a lot of fresh kind of what he thinks on this, how we should think about the banking crisis. And if this interview didn't exist, chances are we might get a question on it later at the Berkshire Hathaway shareholder meeting.
Yeah.
But I liked it when it was kind of more consistent throughout the year, so things happen and you can actually get his response on it as it happens, kind of thing. But yeah, it's kind of died down. He just doesn't do much media anymore. He just doesn't.
And I mean, it makes sense. He's
but when he
older,
does,
so
yeah. But when he does, it is glorious.
Oh, absolutely. Yeah, he used to do a lot of Bloomberg and he even did a couple of Fox ones. He used to go around, and now it's just him and Becky, basically, is all that's left. Which
that's
is,
it.
It's still great that we get a couple each year. Yeah, it is what it is, unfortunately. But yeah.
We got to try and talk to Becky this year at the Berkshire Hathaway. We were so close. In fact, we were a meter away from her, but she was busy at the time, so we didn't interrupt her. I think she was getting ready to either leave or to go up on the stage and do a segment.
Yeah, if you're watching CNBC, you could probably hear us while she was talking. You probably hear us yelling, Becky, can we have a moment? No, we didn't do that.
We love you, Becky. Come do a thing for my YouTube channel.
Three unhinged Australian and New Zealanders just.
G'day, Becky. How are ya?
That was a pretty sick setup that they had, like how they have the stand in the middle of the conference room or the convention center for the Berkshire meeting. That was pretty sick, by the way.
Yeah, that was awesome. Yeah. But long story short, today we are talking about Warren Buffett.
Yes.
What else are we going to talk about? I'm going to talk about this recent Twitter Spaces interview that Elon did with a guy from CNBC, because that was actually quite interesting. He gave us like a full update on the first 6 months of Twitter ownership,
right?
Which I think was pretty cool, because Twitter's private now. We can't really
see.
we can't keep closer tabs on all that's going on. So he said a lot of interesting things. So we'll talk about that. If we get time, maybe we'll go through a little bit on Apple opening some stores in India. So they're making moves in the Indian market, and then we'll hopefully answer a few questions as well. So, and of course, inflation data. So, but nothing too much to talk about there. I think we'll fly through that pretty quickly. But yes, we got some big topics to talk about today. So
we do.
I say, Hamish, and I could be wrong, but I think it's time to get started.
Let's get into it. Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting Sharesight to your broker, or you can download your trades using Excel or one by one. And once you do that, it will track all the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used at tax time to work out things such as capital gains, dividend income, the diversity of your portfolio, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan. You can track up to 10 holdings for as long as you want. They also recently increased the number of holdings you can access on their cheapest plan, their starter plan. It went from 20 to 30 holdings, and there were some other changes there. So if you're interested, go check out Sharesight. Of course, you can use our link, and if you sign up to an annual plan for one of the premium plans, you'll get 4 months off an annual subscription. So go check it out and see the kind of new plans that they've put together recently.
All right, cool.
Where should we begin?
Where should we start? We got to start with Warren Buffett. We start with Warren Buffett.
We do. We'll start with the main kind of thing that was the reason for the entire interview Buffett did with CNBC, which was, as you mentioned, he had traveled to Tokyo in order to meet with executives of the five Japanese companies that he's invested in over there. And he told us that he increased his position in those investments, and also gave us some juicy details about potential future deals as well. To give a bit of a background, this is a bit of a refresher of a story that started all the way back in 2020, which was when Buffett initially invested in these companies. And it was kind of in the background. They are big investments, but they weren't enormous investments. I mean, Buffett he's investing so much money now, so it has to be quite a big investment for people to really pay attention. But it did kind of fly under the radar. And in 2020, a lot was going on during 2020 as well. It was, right in the middle of the pandemic. So for some reason, it didn't kind of grab that much news traction. But he essentially invested initially 5%. He bought 5% of the 5 biggest Japanese trading houses, which are Mitsubishi, Mitsu, Itoshu, Marubeni, and Sumitomo Corporation, which I probably butchered 4 out of those 5 names, except for Mitsubishi, which is
Mitsubishi.
Yeah. But essentially, they're the 5 largest Japanese trading houses. And if you're wondering what a trading house is, it's essentially a business that facilitates trade between countries. So they're an importer and exporter of various goods. And these particular trading houses in Japan are very important and critical to the economy because Japan actually does a lot of importing of goods, in particular food and natural resources. Japan doesn't produce a lot of them in their country. They're a relatively small country, so they have to import a lot of those things. And those imports go through basically 7 trading houses, which are collectively called Sogo Shosha. which are kind of the 7 trading houses, and the 5 biggest trading houses are the ones that Buffett invested in. That was what he did initially, all the way back in mid 2020, where he basically bought about 5% of each of those companies. Then there was kind of one update in between, which was in late 2022. So actually last year in November, he increased the stake to about 6.5% in each of these companies. So again, he made an increase. And I don't actually recall there again being that much coverage of this. Again, it was kind of pretty... It was pretty quiet. The purchases are actually all done through National Indemnity, which is a fully owned subsidiary of Berkshire. So if you look at the Berkshire 13F, it's not in the 13F, but if you look at something like Ticker, for example, and you click on Berkshire, it won't actually come up. You actually have to go to National Indemnity, which is the kind of the investment vehicle that he's done it through. So it is kind of hidden away
That's interesting
in some aspects. Yeah, which is interesting.
I wonder. Do you know? I don't have any ideas as to why he might do that. Why would he put it through National Indemnity Insurance? I'm sure there's a reason for it, but I don't really understand why.
I don't
Do you
know.
have any ideas or not really?
No, I have no ideas either. This is something that I didn't look at it in a huge amount of detail in 2020, and I haven't covered it. Of course, this all just kind of happened over the last day. I will be going kind of deep on some of this stuff and answering questions like that because, I want to know the answer to that question as well. But it's literally just happened last night, so it'll be kind of something that I'll have to dive into. But of course, these investments aren't even on the 13F because they're Japanese companies. So how do we even know about this? Well, Japan has a 5% holding rule where they have to make a public filing if they own more than 5% of the company. So that's how we know it's through the Japanese filings, not American filings, is how we are kind of aware of this anyway. But yes, as I said, increased the holdings to about 6.5% in late 2022. And then it was all quiet, and Buffett really didn't say anything about that investment at the time, as far as I was aware. And that basically brings us to the last couple of days where he flew over to Tokyo, which is, first of all, that's rare for Buffett to leave his Omaha bubble. He's certainly not someone who likes to spend, I would imagine, a lot of time in kind of New York or Tokyo, these big kind of investment centers of the world. He likes to be in his quiet Omaha neighborhood away from all of the action. So even that was kind of a significant event, but he flew over to Tokyo and then spoke with Becky Quick to say that he now owns 7.4% of each company, which is another about a percentage point increase in ownership from just a few months ago, which is interesting. Yeah.
Although he did say, he said that. He's not going to buy much more. I think he said he wrote a letter to each of the CEOs of the 5 different trading houses, and he basically said, "Look, you've got Berkshire as a shareholder, a passive shareholder. We're not going to buy more than 10% of your company. You have our word on that. It's public. We've said it."
Well, what he actually said was, he won't buy more than 10% of the company without approval. And during the interview, he actually did indicate a willingness to want to own more of these companies, which was interesting because you're right, it was kind of a shift in kind of what he had said. What he said during the interview was that he went to Tokyo over the last couple of days to build more of a relationship. And he indicated pretty blatantly that Berkshire would be looking to make a bigger deal with one of the 5 companies. It would just be a matter of whether the deal was good enough. He basically said he basically flat out said Berkshire phone lines are open for calls from these 5 companies, and they will assess deals as they come. But he very much, and then he said, we will send the cash if the deal is good pretty quickly. So it sounded like he is very interested in making potentially an acquisition or at least a larger investment in one of these companies. But of course, it's always kind of the classic situation where it's often easier for Buffett to find deals on pieces of companies than the whole company. So it's whether he'd be able to acquire the whole company for the dirt cheap prices that the shares are currently trading for is another question. So yeah.
But I mean, if a company's calling him up, then maybe that is the possibility, right? If the company's actually like, hey, Warren, do you want to buy more of our business? Then maybe there is an opportunity that he could get a good deal. But that's interesting. Yeah.
Yeah.
My interpretation of that section of the interview was just like, if they needed it. Like my interpretation of that was like, Buffett thinks these are great businesses and he likes the management and he likes that everybody it's just a good relationship. So if they needed help, I think my interpretation was they don't want to buy more than 10%, but if they needed help at any stage, the line's open, you can call me anytime. I'm over in Omaha kind of thing. But maybe I could be wrong. No, I guess you could take it two different ways.
Yeah, well, the thing is interesting because, if you look at the financials of some of these companies, they're pretty solid businesses. So you would imagine, what would be the reason for them wanting to sell to Buffett, given they're not in any particular strife or anything like that. And that's typically, Buffett even just said that in his letter that to wholly own or to buy out an entire company, typically it's going to be in some kind of financial trouble in order to get a good deal. Otherwise you end up just overpaying. And of course, so there was a couple other comments that Buffett made. He said they're essentially, big critical companies for the Japanese economy. They're businesses that he pretty quickly could understand very easily. He likes that they are kind of diverse or similar to Berkshire in that they kind of have their hands in a bunch of different industries. So they're kind of importers and exporters of a lot of different types of goods. So they're kind of diversified in the types of products that or the types of industries they're exposed to. And then, of course, they were selling at a ridiculous price, especially, he said, compared to interest rates at the time, which, back in 2020, when he made most of the investment, the risk-free investment alternative, US government bonds, was basically zero. The 10-year bond was at 0.5%. So locking your money for 10 years at 0.5%, and the short rates were actually basically zero, like 0.1, 0.08 I saw them. I saw the 30-day rate at one point during 2020. So rates were the alternative opportunity to invest was basically zero. And these stocks at the time, he said, were offering a 14% earnings yield. They paid dividends, and those earnings were more likely than not to grow. Which was his kind of assessment of their future earnings potential. Not some specific growth targets, some particular growth ambitions, but just that they're incredibly solid, critical businesses, and their earnings are more likely than not to be higher. And even if their earnings didn't grow, it was an incredible deal at the time. And even with interest rates where they are today, it would, given 14% earnings yield and growing earnings, it still sounds like a pretty good deal.
It's a diversified bet, kind of like what he's done in the past with like pharmaceuticals, diversified bet, airlines, diversified bet. Obviously, because otherwise he would have, there's 5 major trading houses and he bought all 5. He didn't buy 2 or 3. Makes sense. And that's what he was talking about. You're right, is that at the time it was just very obvious the valuation was extremely low. He wasn't getting, he could put Berkshire's money back into government bonds and get nothing, basically. So he looked elsewhere and he found these. And he's been, he said he's been super, super happy. He said couldn't feel better about these investments. So it's pretty solid.
Yeah, interesting to see. And then the other thing that that Tom reminded me of, investing with Tom reminded me of, was that at the time when he bought these companies in 2020, he did it by issuing bonds in yen in Japan at basically 0%. So he was able to borrow money for free, and then make these investments with basically free money. So it's kind of a crazy. It's just an entirely unique situation.
It's interesting, isn't it?
Obviously, that kind of investment isn't open to to the average person. You can't just, issue your own bonds in Japan, but it's just a very unique opportunity. And we'll kind of get to see if it'll continue to be a larger part of Berkshire over time.
Yeah, for sure. Yeah, it was a very interesting bet. Yeah, I can't say I know much about these I think I actually, back when I made a video on it, I had Tom explain it to me on the channel because I just had no idea. I think we did a collaboration for that video, if I remember correctly.
Yeah.
Very cool. All right, so that's the Japanese trading houses. What was there anything else to add on that, or what other topics did Buffett talk about?
Well, that's it for kind of those investments, and I think both of us will probably, I certainly will spend some time over the next few days, kind of going into this stuff. Listening to everything that he had to say on the topic, because unfortunately the interview just came out a couple of hours ago, but he did talk on quite a few different topics. Becky Quick was good to make sure she had questions on a bunch of hot topics at the moment. Thank you, Becky, for covering all bases.
We love you, Becky.
Some of the more interesting comments about the economy. Everyone's always kind of curious about Buffett's thoughts on the economy. He said all his businesses are reporting that it is tougher. Many are operating off orders made in the previous period, so just tougher operating conditions for Berkshire's businesses. He also said it's harsher conditions, but not the end of the world, which is kind of Buffett's thoughts on the economy. Is it's just a different operating environment. He doesn't. What did he say? He's like, we run our businesses not as if it's going to be hunky dory all the time. He runs his businesses with the expectation that there will be tough times, as there have been every few years since the beginning of economics. That's kind of his kind of philosophy on that.
It's kind of like Charlie Munger has a very similar philosophy where he basically just says, sometimes the tide's in, sometimes the tide's out. Sometimes it's with you, sometimes it's against you. And whatever you do, you just got to keep plowing through. You're not going to have great conditions all the time. You're not going to have terrible conditions all the time. So you just have to, just keep pushing through.
Yeah, absolutely.
That sounds like that aligns very much with what Warren was talking about.
Yeah, and it has to that has to go into that does go into his investment decisions, in that we've seen certainly over the last couple of years some types of businesses for which the state of the economy did matter for their performance. I think unprofitable tech is a great example of this, where if you're an unprofitable tech company trying to scale quickly, you need a lot of capital, and a lot of that's going to be debt, and that has dried up a lot over the last couple of years as interest rates have just gone up, and it's been very difficult for those businesses to get more capital, and stock prices are down, so the access to equity capital as well is also more difficult. So that's a kind of business, or some of those businesses, where the state of the economy does matter, and that's then it's very difficult because you're relying. The performance of the business is relying on an unknowable factor, whereas you could otherwise invest in businesses where the conditions don't matter that much. Of course, they're going to impact the business. It's going to be tougher, but long term, it's not going to impact their survivability or their position in the market, for example. He was asked directly, is a recession more likely now than 6 months ago? And he essentially said Berkshire managers would say that they were surprised by the conditions that we see now, but he's still running Berkshire. But since starting Berkshire, he's never found economic forecasts to be useful in running businesses. He said economic forecasts exist because people want them, but they're useless. So people kind of desire to know what is going to happen in the economy, even though it's kind of this unknowable thing. And as a result, there's a group of people who are very happy to make forecasts, whether or not they're accurate or not.
Yep. It's almost like media companies profit from people that make economic forecasts. Yeah. It's almost like if you open CNBC, 9 out of 10 of their articles are somebody making some sort of forecast.
Yeah. And I mean,
it's so silly.
that's a large just nature of the industry is that people want to know. People want to know what's going to happen in the short term, regardless of whether it's something that can be predicted. People want to know.
Yep. It makes sense. Like anecdotally, you go to a party and as soon as, you mention to someone, oh, you make finance videos about the stock market, they're like, oh, so what stocks do you reckon are hot at the moment? It's like the first thing that everybody says. Then you have to go through the whole rigmarole of, well, the stocks that are good for me are not the same as the stocks that are good for you. I'm thinking about 20 years, you don't invest your house deposit, blah, blah, blah. But yeah, no, it's so true. Economic forecasts, get rid of them. Should be illegal. You're not allowed to make an economic forecast.
Should be a crime.
It's so fun. I mean, it always comes back down. The funniest thing, and the example I always use is like the Federal Reserve making forecasts. I mean, they have their hand on the lever that changes the economy, and their forecasts are wrong.
Yeah, they have access to all the data immediately. The moment it comes in, and they're still wrong.
It's like if they can't accurately forecast, and they've literally got a lever that changes economic conditions, then how can anyone else make an accurate forecast? It's impossible. It can't be done. It just can't be done.
Yeah. Yet it kind of has to be done because that's what people want. I mean, if the Fed just didn't give a forecast, like I think people like you and me would be indifferent, but a lot of people would be really upset. How can you be in charge of the monetary system if you don't have an idea of what it's going to look like in 6 months? So they kind of have to give a projection, even if they know it's probably going to be wrong.
It's just psychological, behavioral
it's a very,
patterns.
Very weird situation. What else? That's a rabbit hole. He spoke about the banking crisis a little bit. Of course, we haven't heard Buffett's thoughts on SVB and this regional bank situation, and then that kind of spread to some banking issues in Europe. We saw Credit Suisse end up struggling and need to be bought out by UBS, and a couple other banks have kind of had some troubles as well. He's essentially said the banks haven't made the same sort of mistakes as 2008, so kind of parodying what a lot of people, Jamie and a lot of others are indicating, which is there's been mistakes made during this crisis, as there kind of always is in a banking crisis, but they're not the same mistakes and certainly not the same severity of consequence as 2008. He said no one's going to lose money on deposits, which kind of seems to be the case, at least this time. He was asked, did he see kind of this banking crisis coming, and is that why he sold his bank stocks? Because Buffett sold every bank stock except for Bank of America, not recently, but over the past decade. He essentially said they're not poorly run, but banks can get into a lot of trouble. And he said that he just doesn't like the business as much as he did before. He said he doesn't like when banks start hyper-focusing on earnings and break core banking principles to do that, to try and keep increasing earnings. So he essentially didn't like really the banking philosophy had kind of shifted over time. And that's why he decided to kind of sell out of almost all of his banking investments except for Bank of America.
That makes sense. If they're getting, if they're more focused on earnings, then that highlights to you that they're more short-term focused, right? Earnings happen every quarter. So if they're focused quarter to quarter and they're not looking at, that's the one thing that that's the one thing that's different with Jamie Dimon. You read his annual letter and his perspective is always about having JP Morgan be a long-term financial fortress, kind of similar wording to what Buffett says about Berkshire. We got to make sure that we don't take any unnecessary risks. We have to be there in 10 years. We have to be there in 20 years. We have to be around in 50 years. So we have to protect. We have to go at it with that approach. So it makes sense that maybe Buffett sees some of these other banks. I can't remember what was he investing in, like Wells Fargo at one point. I don't even know. I can't
remember the others.
What other ones he sold? Yeah, Bank of New York. Like
few
some of those
ones. I can't remember the names, but Wells Fargo was the big one. Yeah.
It makes sense if they're coming out saying that they're focusing on, or it's obviously trending more towards focusing on earnings to earnings. Then of course Buffett's going to hightail it out of there. That's not Buffett style investing at all.
Yeah, I think banking's one of those industries where there's so many things that management, so many decisions management could make that would increase risk and increase earnings in the short term, and it's just a business that's kind of vulnerable to that. I mean, you think about even just the decisions to where to store money, like what assets to buy, and you might think, yeah, I mean, even some of the regional banks thought, storing money in long-term US government bonds was a safe play, and it turned out that wasn't a safe play, right? So it's a difficult business, but even if they're not being malicious, it can be hard to decide where to store money, what's going to be liquid, what's not.
Yeah.
But yeah, then you add the element of banking executives wanting to increase their bonuses, and all of a sudden, yeah, there can be significantly more risk there. What else did he say? He had something else to say on the banking crisis. I don't know if I have it here though.
That's all right. I wish I could help you out, but I am yet to watch this interview. It's literally, we're going to finish the podcast and then I am going to sit down and watch the whole thing.
Yeah.
It's literally, in about an hour, I'm going to start watching.
Yeah. No, 100%. I just found it. He spoke about commercial real estate, which is kind of an industry that is related to banking, certainly, because a lot of the loans that commercial real estate get, of course, come from banks. And it's also an industry that is looking like it's very much exposed, at least to some extent, to the rising interest rate environment. So a lot of commercial real estate loans are coming due before 2025. So there's like a whole bunch of them. And on top of that, if you particularly look at something like office space, commercial real estate, demand for office space real estate is down significantly in the last couple of years, as you have a huge amount of people who are now mixing working at the office and working at home, or just purely working at home. So there's just been an overall shift in how people use office space, and it's gone down a lot. So the combination of that, plus loans coming due, plus those loans are going to be refinanced at much higher interest rates, is a cocktail of a situation that we will kind of see play out until 2025. It's there's no way to know exactly how bad it will be, or if it even will be bad, or maybe before then interest rates are back down. We really don't know what interest rates are going to do, but it was an interesting situation. And Buffett's kind of comment on this was, Becky basically asked if something should be done to kind of prevent it from collapsing, because there's worry that a lot of commercial real estate loans failing would flow into the banks in a meaningful way. And he basically said, no. He basically said if rates change, the person who bet that they won't change has to lose money. That was basically a situation. That his kind of take on it. So clearly he doesn't think it's that bad, but there probably will be some losses in that respect, of people that essentially bet that interest rates wouldn't go back up. And why that's related to SVB is because they made the same bet, right? They bought these long-term US Treasury bonds, and it was really a bet that interest rates wouldn't go up, because when they did, the value of those bonds went down a lot. And that's where they got into trouble.
It's kind of like saying, I don't know, say you'd studied 3 days for a test and you got a good grade, and then somebody that didn't study, should they be allowed, oh, look, you got 45%, but that's okay, we're going to boost you up. So no, obviously, if you take the actions that, if you're betting on something and then it doesn't pay off, then bad luck.
Yeah, pretty much. Unfortunately, that's just kind of the nature of business. There has to be a consequence for making bad decisions. Otherwise, people will make more bad decisions. Yeah. That's just the nature of it. We've certainly seen.
Imagine if the person that didn't imagine if the person that didn't study for the test and got 45% was just like, it's okay, Timmy, because we've actually boosted up. We're going to bail you out. We've boosted your grade up to 80%. Well done. Well done. Yeah, no.
Yeah, pretty much.
Yeah, no.
It's like, it'd be like if they did that. The banking equivalent of that is like, well, if they gave that person the pass grade, but not only did they give them the pass grade, they took points away from the other students. They like that's like the tax part of it. Like the taxpayers pay for it. Like they deduct from everyone and give it to them.
You got 98%, so you're gonna have to give 8 percentage points back, so you actually get 90.
So you did get a high distinction, but because little Jimmy over there got a 39, you're actually now.
Oh dear. That's funny. Anything else that Buffett was talking about?
Yeah, I mean, there's a lot. He spoke about
anything that particularly stood out.
He spoke a little bit about AI and ChatGPT, which is all the rage at the moment. Of course, there had to be some questions there. He said, and this is a quote, "Something I don't understand at all." He doesn't really understand it, but he said he has been playing around with it. Like he has been trying things with it, and he finds it interesting. Which is good to see that he's kind of seeing what the technology is all about. But you're not alone, Buffett. I think a lot of people don't really understand it or what it's going to kind of look like. He said, I thought this was funny. "Let me know when I can ask it how it's going to ruin the human race, and then let someone know they can unplug it."
Unplug it at that point.
Yeah, which I thought was quite funny. He said, "It's an incredible technological advance, but not sure we know what will happen as it grows." And that's kind of the scary, uncertain element of these technologies. Same was, I would imagine, very true for the internet. And we haven't even seen that fully play out yet. Obviously, the internet is fantastic, but we're starting to see some negative parts of the internet. Whether it's social media effect on young kids and that sort of thing. And it's only really been 20 years. So there's always an uncertain element of new technology and how it should be used. We're kind of just, we're the guinea pigs when you're, we're the guinea pigs. What can we say? So yeah, but that's always kind of thoughts on that.
Nice. Good stuff. Cool. Do you want to talk about? I don't know. Just I know you've got a whole bunch of topics. Is there anything else you want to bring up, or
I think we'll leave it there.
Move on.
We'll leave it there for now. Maybe depending on what else is in the interview as we listen to it, maybe we'll have some topics to talk about next week potentially.
Okay, that sounds good. That sounds good. Well, let's talk about Twitter.
Yes,
let's talk about Elon Musk.
I'm excited to hear this because I haven't. It is as you said, it's a private company. We don't really know what's been going on under the hood.
He's been unhinged, Elon, on Twitter in recent months.
I don't know if I'm a fan of new Elon.
He just doesn't. I don't know. He's just no filter Elon. He is literally no filter Elon now.
Yeah. I mean, look, he's his own person. He can do whatever he wants. I just find some of his stuff a bit immature sometimes, but he's having fun. So I guess who am I to judge, right?
Yeah, I tend to agree, but he's been beefing a lot with media companies at the moment.
Yes.
I think it's fair to say that he doesn't like. He said actually in this interview he has a love-hate relation with the media, although it does tend to drift more towards hate. But I guess in some instances it's fair enough because the media loves to hate him, and they obviously turn a nice profit on articles that are anti-Elon Musk. So there's just been a lot of beef with me. Like they took away the New York Times verification check mark, that kind of stuff. But it was interesting. I'm interested. I found it interesting that he actually agreed to sit down for a spontaneous interview with a reporter from the BBC. And Elon had been beefing with the BBC on Twitter as well. And it was a good chat. It was like an hour-long interview where they just went. Basically, the interviewer just asked him a lot of different questions about the first 6 months of Twitter ownership. So I've kind of just written down a whole bunch of points, and we can just go through them.
Yeah.
He basically said the first 6 months of ownership have not been boring. It's been going reasonably well. They've seen some all-time highs in terms of usage time, like usage minutes, which is good. He said usage is up, growth is good. The site works mostly, was his quote. And they're doing it with a small fraction of the original headcount. And on the topic of headcount, he noted that when he took over, they were at about 8,000 employees, and now they're down to, any guesses, 1,500. 1,500.
Wow.
So
that is some cutting of the workforce. Wow.
Yeah, that's a very big cut. And of course, that fact alone in itself has generated a lot of negative media attention. But Elon talks about it. I'll talk about that a little bit later.
Yeah.
He said, what are some differences? What have you done? What are some changes? He said Twitter's now running on 2 data centers instead of 3, so they're trying to save money. They've also made many improvements to the core algorithm, so the CPU usage is actually dramatically less. The app is now extremely responsive. He's added long-form tweets. They're rolling out subscription programs so creators can make a living from posting their content. They open source the algorithm for higher transparency. So he's actually, they've done a lot of stuff in 6 months. He's not just kicking his feet up.
Yeah.
One thing that was interesting is he finally stated his opinion, his side of the story around the acquisition, which the media, we'd all kind of figured out already, but we'd never actually heard it from Elon. So he said originally he definitely did want to buy Twitter, and he got annoyed because the board basically poison-pilled the situation and made it extremely difficult for him to actually buy a controlling stake or do a hostile takeover and buy the company. Yeah. And he was just laughing because then it was just a total 180, because eventually he figured that he didn't want to buy it at the price that he offered. And then the board also flipped and said, no, you must buy it. So it's gone from him wanting to buy it and the board saying no to him not wanting to buy it and the board saying, yes, you must. Yeah. Which is kind of funny.
It's like when the other person just wants to disagree with you, like just wants to do the opposite of what you want.
Yeah.
Well, you don't want it anymore. I don't want it anymore.
Yeah, exactly. So he eventually did buy it, as we all know. And the interesting point about that, why it didn't go into the courts, is because he actually admitted that his lawyers thought that there was no way he was going to get out of buying Twitter. So he did. Of course, the reason he didn't want to buy it was because of the amount of active like real people that were using the platform. He noted that Twitter management previously were incentivized to have higher usage numbers, so they turned a blind eye to the amount of scammers and spammers and the bots that were on the platform.
Right.
So that's why that was obviously, we all know that was the reason that Elon was like, hang on, no, I don't want to buy this anymore. It's like all just bots. And he basically gave a warehouse analogy where it's like, okay, I want to buy a warehouse, and they tell you that 5% of the goods in the warehouse are damaged, but the rest are fine. And then you actually buy the warehouse, go in there, and like 25% of the goods in the warehouse are damaged.
Wow.
And it's like that obviously changes what you would want to pay for the warehouse. So he said that, like he wanted to step down because he didn't want to pay that amount for Twitter. Like that, if the amount of active users, the amount of actual real people on the platform is substantially less than what they were saying, then he didn't want to pay, what was it, $40 something billion for it. He wanted to pay far less, but he got stuck in that contract, and his lawyers said, look, I don't think you're getting out of it. So he went through with it.
Did he actually say that 25% was he implying that 25% of the active users were fake, or is he just using a random number as an analogy?
The way it should be looked at is he's just doing a warehouse analogy. It should, but you can guess that it's implied, because I'm pretty sure that because he said 5% of the goods damaged, and I think that Twitter said that 5% of their users are bots.
They did.
Yeah. So I think you can imply that he thought that about a quarter of Twitter users were fake,
which is crazy. Yeah.
He didn't say that, but I think you can. I think that was what was implied.
Interesting. Okay.
Yeah, I'm just trying to think. What else did I write down? At the point that the transaction closed, Twitter was set to lose $3 billion per year and had $1 billion in the bank.
Wow.
So, and this is where they start talking about like the severe reduction in headcount.
Yeah.
And Elon kind of turned the tables on the interview and said, well, look, what would you do? Like, a company has to be able to run of its own accord. Like, it's not like businesses aren't just charities. You don't just, hey, can we have some donations and we can keep running our business? They have to work. And that's the nature of capitalism. If your company doesn't work, if it doesn't run profitably, then it dies.
Yeah.
The ones that do work survive. And that's kind of, I don't know, natural selection in the business world.
That's exactly what it is. Natural selection.
It's natural selection in the business world. He noted that, Twitter was set to lose $3 billion per year and had $1 billion in the bank. So they were looking down, staring down the barrel if they didn't make some drastic changes. So he noted that they saw a cyclic drop in ad demand, like the other platforms have as well. Revenue dropped from $4.5 billion to $3 billion, and costs went up from $4.5 billion to $6 billion.
Wow.
So he noted that unless drastic action was taken immediately, Twitter was going to die. And that's when he spoke about the employees being let go. It was necessary to drop from 8,000 down to 1,500 people now. He also noted that he's almost at break even from a cash flow perspective now. And he actually thinks that if they execute well this quarter, then they will be cash flow positive, which would be good.
Interesting.
Yeah.
Did he have anything to say? I'm guessing not, but on the specific kind of performance of his new kind of Twitter Blue rollout with his new kind of verified check marks. Did he have anything kind of just give some like any details on how that's adding to ad revenue?
No, he didn't give like numbers. He did speak about it a little bit. Like he said that all of the legacy blue check marks are going to be gone in a week or two. The idea behind that is they want to treat everyone equally, so they don't want a special anointed class of journalists that are the special ones that get to tell people what to think. They don't want a system that ends up like that. They just want to kind of power to the people. I don't know if you buy into this, but they kind of want power to the people. So if you buy into the system, then that's good for you. What else did he say? He spoke about bringing Trump back. Obviously, the interviewer was kind of, well, what do you say about that?
Yeah.
And his point is pretty consistent with the point he's raised before, that Twitter should be a town square that gives equal voice to the whole country and the whole world. And he noted that it should be a niche. It should not be a niche left-wing kind of political platform based on the local politics of where their headquarters is, which I think is in San Francisco. I'm not sure.
You know what? I had a thought, and this probably isn't an original thought. I probably read this somewhere, but I don't understand, since most of the moderation on these platforms is automatic, it's algorithmic, why don't they just have different filter levels that an individual can choose? Like, I could be on Twitter and I can select Wild West, and I can see every single, and so no posts are ever basically restricted except for actual crime posts that are criminal offenses.
Yeah, like break the law,
call to action, that kind of thing, violence. But besides that, you could click Wild West and any post can go and I can see everything. Or I can just go normal Twitter moderation. And a lot of the stuff that now currently gets deleted and you get banned just isn't shown to you. And then you can have like really strong moderation. So it's very clean. Why don't they just do it like that? Because then it can be a town square. If people want to post crazy, unhinged viewpoints that are legal, but like just unhinged, sure, go ahead. But most people are not going to see it because they'll choose to not see that, because most people I don't really want to see some crazy conspiracy stuff on my feed. Why don't they just do it like that?
I think my guess is that because most people don't actually want unhinged versus, clean Twitter. I think that people want unhinged, but only regarding the things that they care about.
Their own views.
Exactly.
Yeah.
Exactly. And I think most people, like, logically, they think, no, I'm like, I'm politically unbiased. I do my research. But I think people don't realize that they're probably not.
Well,
They probably are a bit
everyone's
politically biased.
Yeah.
Yeah.
There's no such thing as politically unbiased. Everyone's biased.
Everyone has their thoughts and opinions, and I think they want, it is, and it's grounded in psychological evidence, like around confirmation bias. There's a reason that confirmation bias is a thing.
Yeah.
It's because it exists. People want the information that says that they're right and that the people they disagree with are wrong. So I think that's probably why that I don't know. I'm just voicing an opinion, I guess.
Yeah. No, I think that makes sense. It just seems like, to me, it just seems like, I don't know, obviously different people are going to want different levels of moderation. And you're right, it is kind of going to go down to your political views. So maybe it doesn't work as like a broad, more censorship or less. But yeah, it seems like you're never going to have a platform that obviously you're never going to have a platform that satisfies everyone, but there's very distinct differences of what people think should be allowed. But then, at the end of the day, I guess if you don't want to see, Trump doesn't even post on Twitter, but if you don't want to see it, you can just block him, I guess. So you can already kind of do your own moderation on a one-by-one basis, like in that respect, I guess.
Yeah. Elon was asked as well, is there more misinformation? Elon kind of danced around the issue a little bit here. His point was essentially like, well, who's the arbiter of misinformation? You can kind of phrase a story one way or another depending on what you think and how you feel, kind of thing. He kind of just danced around and didn't really answer the question. He had a massive beef there's like a solid like chunk of 5 minutes in the middle of this interview where he had a bit of beef with the interviewer because he was like, do you think that there's more misinformation on your feed? And he was like, well, yeah, I think there is maybe like sexist, racist content. And then Elon was just like, okay, well, just give me some examples. And the guy was like, well, I haven't actually been on my Twitter feed for a good like 3 or 4 weeks, so I can't quite remember anything from it. Elon was like, this is crazy. Like, you're hooking into me about misinformation, and you say that there's more, but you can't actually note any examples of there being misinformation on your feed. It's like, then they just kind of beefed a little bit for 5 minutes.
Yeah, those topics are tough because there's no definitive data on that, because it depends on how you frame what hate speech is or misinformation. And then the journalists don't have access to the data anyway. So it's there, and everyone's experience will be different on social platforms, just anecdotally. How much time do you spend on there? I mean, I don't actually spend that much time on social platforms. So, if someone spent 3 or 4 times as long, they're more likely to see hate speech than I would, just by the pure time that I'm on the platform. So it's just, there's a lot of factors, I think, that it's never going to be, turned out that guy was right on that topic. It's always going to be a muddly situation.
Yeah. Yeah. And it's also like, I think another question is, what is misinformation?
Yes.
And what is a viewpoint that you don't agree with?
Yeah, that is completely blurred, because if you ask me to define misinformation, it would be a very small number of things that you can definitively say for a fact that is true or false, objectively true or false. Like, the Earth is round. That's definitively true. That's not an opinion.
Or is it?
Ooh. Imagine if I'm like, the Earth is flat. That is definitive.
Oh my gosh, I just watched our subscriber count. Just
retention just no. But to me, there's very few things that are objectively true. Like mathematics would be one, but that's not controversial, because we can objectively prove if a formula is true or if something is scientifically true. But most things where we're debating misinformation is like political. And those things, in my view, they're not misinformation because they're complex issues. But some people will say, no, this study says it's true or false. Therefore, based on that, it's misinformation if you say something else. And that's a whole can of worms.
It is a can of worms, because you can take it even more meta and say that actually there are very few truths in the world. Even we talk about science being the truth, but science a lot of the times doesn't even know whether what they're saying is true. They just say this is what we best know at the current time.
Based on the data.
And based on the data we've got, this is the best kind of conclusion we can come to. And then eventually, like, how many, I don't know, models of the atom have there been? Eventually science gets updated because it's like, oh, actually, we thought it worked like this, and we did do some experiments that said, yes, it does work like this, but now we've done further experimentation that actually shows that some of these things don't work in that last model, so we update the model.
Yeah.
So, well, we can get very meta. We can get very meta with this discussion. So I say we just put a pin in it and move on.
What else? Did they talk about anything else in the interview?
It was asked if all advertisers have come back now. A lot of advertisers kind of cut off from Twitter because they were unsure what it was going to be like under Elon ownership. Elon said not all have come back, but most. Twitter is roughly break even now at this point. If trends continue, they'll be mostly cash flow positive. And he basically said, look, if Disney feels comfortable advertising children's movies, if Apple is comfortable advertising their iPhones, those are pretty good indicators that Twitter is a good place to advertise. Which makes sense. I mean, Disney ain't gonna they're not gonna advertise Frozen or something if it's like rampant, I don't know, hate speech and all that sort of stuff. So also asked if he regrets buying Twitter. He said the pain level of buying Twitter has been extremely high. At the end of the day, it should have been done. So I think that he doesn't regret it, but certainly been some tough stuff. He was asked about emotional strain, like just how you're feeling. He's like, it's he basically said it's hard being under constant criticism and attack. He said he's under constant criticism and attack, and that's rough. Was his wording. If the media is writing nonstop stories about why you're a horrible person, that's hurtful, obviously.
Yeah, so I think that is an element of this that I think a lot of people really, really misunderstand, which is that at the end of the day, he's a human being, and
he's just a guy.
99.9%, 9999% of people would be obliterated in that situation. I mean, I just think about the stress that I'm under for the very small amount of hateful stuff that I see online towards me. Very, very small, right? It's mostly positive. Imagine if half or more than half the world basically has a strong negative opinion about you, and you're always in the news cycle. And, I think people just, that is an element of this that's very tough for people to understand at all, what that's like.
And also the fact that a lot, not all, but a lot of the articles that are written that have made people hate you are not actually true.
They're misinformation. Or are they? No, you're right.
Full circle. Yeah. Full circle, Hamish. Full circle. All right. I think that's basically all I've got to say for the Twitter thing. But it was very interesting. Just look it up. I don't know what to type in. BBC interview Elon Musk.
Elon Musk destroys BBC reporter on hate speech. That's how you...
That'll get you a clip. That'll get you a very funny clip.
Yeah.
But it's worth listening to because, I mean, Elon's very good at, although he's a bit of a crazy guy, he's very good at, arguing things rationally. Talking through rational points about things like, oh, why did you lay off? It seems a bit rough. You laid off the workforce 8,000 to 1,500. And he's like, well, when you put it in cash flow terms, a company has to be able to stand on its own 2 feet, and we were losing this amount of money. What are we going to do? We closed a data center. We had to reduce our workforce, and now we're roughly at break even. It's like, would you rather, 6,000 people lose their jobs, or would you rather 8,000 people lose their jobs, kind of thing?
Yeah, so, it's one or the other. Yeah,
it's like, okay, well, I'll take 6,000 people losing their jobs as opposed to 8,000. So it's very interesting how he argues things, always kind of grounded in. Well, that's his thing, grounded in first principles.
Yeah,
rational thinking. Okay. We've been going for quite a while, Hamish.
Yeah, we spent a lot of time talking about Mr. Buffett and
Mr.
Elon
Buffett.
Musk. Yeah.
So we might just do maybe one or two Q&A questions and then we'll bounce out. Here's an interesting one. Should we do this first one?
Yeah.
All right. Kind of relevant to what we were talking about earlier. Hi, guys. What do you say about artificial intelligence? Is it good or is it maybe a little bit scary?
It's definitely a little bit scary, but it is certainly going to be, I would imagine it's definitely going to be good. I think everyone is always scared of the new technology, of the unknowns, and AI seems to have a particular level of that, just because the capability of it is so far in excess of anything we've experienced before, anything we could imagine. But I always just think back to what would it have been like if before the internet. That's always my kind of thought, and I imagine that a lot of the same fears would have been there, that it was just this incredible unlocking of knowledge and global connectivity that you just couldn't have imagined. Whereas for us, it's just, there are problems, but it's just, we're used to it. It's just part of what we do. In fact, it's been very good for the both of us, I would say, the internet. I don't know what I would be doing if I grew up, before the internet. Who knows? But with AI, it's going to be very interesting to see the radical change in what jobs people do over the next 100 years. I'm excited about it. I'm definitely kind of concerned in some respects, because there's no way that legislation will come out before there are issues. If there are big issues, like foreign powers using AI in a negative way, or scammers using it in some way to break into whatever it is, right? For security purposes, there's no way that legislation will come first. The legislation will come way after, if ever. So that's the scary side of it, is if something really goes wrong, there's no way we're going to stop it.
Yeah, no, I agree. That's the thing about politics. It's just so much red tape. There's so much back and forthing. It's just about bickering, really.
Yeah.
There's just a lot of bickering. So very rarely things get done. Not a lot changes. Not a lot gets through. So that does concern me as well. I think it's a very big technology. I mean, I should say that this is all. I don't know anything about AI really. I don't know how to code. I don't know anything really. This is just an opinion. But from what I've seen, just from like even just ChatGPT, I think AI, a mature AI, is both extremely helpful, but at the same time, my take is you really have to think about the negative consequences of it.
Yeah.
Because it will be so helpful. I mean, it's so helpful already. You just type in like, hey, ChatGPT, educate me about this. And it's like, blah, 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 and it just tells you, it's so handy. Yeah. And I think people still think of AI and they kind of think of like robots tripping over themselves and falling over, or like banging into walls or something like that, or dropping a cup, or like something dumb like that.
Yeah.
But when we're just thinking about AI, the scary thing to me is that there's no way like what Elon says, we are not going to be able to hold a candle to AI. We are just so, compared to mature AI, we are dum-dums. We are biological we're monkeys. We're biological dum-dums. That's what we are.
Yeah.
And AI is just going to run rings around us, but they're going to run rings around us and we're not even going to know it.
Yeah.
Because we're just too stupid.
Because it's already
and that's just the
here.
reality. Because it's I am the AI. This whole podcast, we're not even real.
Well, speaking of that, I think that's probably one of the biggest concerns, is like deep fake and that kind of technology is going to get so good that
it'll be flawless.
It'll be indistinguishable. You won't actually really know anymore if a footage of somebody is actually them. And that's kind of an unfortunate reversal of an incredible technology we had, which is we've had cameras where, like, if there's a crime going on, people can very quickly, everyone's got a camera on them, so they can quickly gather evidence pretty discreetly as well. That's, I think, maybe not in the near term, but long term, that's going to go away because you won't be able to prove whether it's real or not.
Yeah.
That's a crazy, like, kind of reversion back to before a lot of the technological advancements that we've had, which is kind of wild. So yeah.
And when AI gets control of the internet, like, it's a worry. It's like we're still like, look at this thing. look at this thing.
Yeah.
This is how I interact.
Still,
I go like this.
We're still punching things in with 2 fingers.
And I'm going click, 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 and I move my mouse back and forth, and I look at a screen, and AI is just like,
yeah. And we all
everything.
We all get to the end of the week, and we stop trying, and we put poison in ourselves. Like I don't think the AI is going to stop on Friday and short circuit itself for a couple of days and then come back.
Yeah.
No, but
Exactly. No, that's
but
it.
it is going to be it's exciting, I think, overall. You've got to be an optimist. Otherwise,
otherwise
the world
you
is
just cry.
You have to be optimistic.
Oh, I could see you winding up for a very dark joke there, but I'm glad you're afraid.
We'll save that for the 15 minutes off the podcast.
Yeah. I love Hamish has sometimes got a great dark sense of humor, but sometimes it's very funny, but you just got to be careful sometimes.
No. We'll keep that for the
I love it.
hours.
I think it's hilarious. Like you'd make a great Netflix special, but
no,
it's just where
we'll see in another
I
life.
just don't know if it's right for an investing podcast.
No,
that's all.
For the Young Investors podcast, I don't think it quite fits. No.
I do love your sense of humor, though. But anyway, that's enough for today. I think let's wrap this thing up.
Yeah, thanks everyone for tuning in. As always, if you have questions, we're always welcoming new questions that we can answer in the future episodes. So head over to the YouTube version of the podcast, click on the latest episode and leave your questions as a comment on the latest episode. Or if you're on Spotify, then it's even easier. Just scroll up in the app while you're over the episode, and you can leave your questions natively in Spotify. So leave your questions there, and we'll try and answer as many as we can in the future. Thanks to Sharesight, as always, for sponsoring. Sharesight.com/young investors. Go try out an annual plan and get 4 months off if you sign up to a premium plan. Thanks, Brandon, for joining me, as always, and we'll see you guys next week. See you guys.
See you later.